When we look at the Amazon stock, we're looking at a more diversified business. Obviously, their e-commerce business is the biggest revenue portion of the company. But again, the AWS, public cloud, data center business is where most of the profit comes from. It's a $2.44 trillion market cap company, and their P ratio is 34.9 current year, 33 for the next year. Analysts think it's discounted by 14%, and it's a strong buy. The appreciation on Amazon's 34% over the 5 year. Over the last 5 years, only 34%, but really Amazon's just been a huge winner for investors that have stayed long on Amazon. Now, when I look at the revenue, it is incredible to see a company this big grow by more than 10%. Their revenue total is $670 billion. Their cloud business is well over $120 billion, and that's their data center business. So this is the biggest scale public data center, public cloud company out there. They drive really good free cash flow and also have good profits. Gross margins overall are good at around 50%. That incorporates their e-commerce business, which is a lower margin business. We have lots of analysts covering Amazon, and the most bullish case is this stock is worth 300, and the most bearish case it's worth about 200. So it's not that much of a risk if you invest in Amazon. That's one of the benefits. I would say that older investors like myself are probably more comfortable investing in Amazon. I did my intrinsic value calculations for Amazon, and I've arrived at a 12% discount available on the Amazon stock. I think each share is worth $258 a share. And right now, the market's selling shares for $229. Now, when I look at free cash flows, the free cash flow doesn't look as great as it could because they're investing so much in GPUs and other types of technologies in that data center. It's a short-term investment for what I believe is going to be long-term benefit. Over the long haul, they're going to have some big businesses using Amazon AWS to run some of their most important workloads, some of the most important applications, including artificial intelligence. So this, to me, is a very sound company with a strong strategy, and their cash flows are solid. Their cash flows provide a fair price on Amazon with just a 2% discount. When I look at earnings per share, they are going to expand nicely and actually provide a 25% discount when I value the company based on earnings per share. When I blend the two and I take more weight in free cash flow, that's the method that most of these legendary investors have used. I get a 12% discount. On a business that is this important, Amazon, with a strong moat, both based on a network effect created by the fact that they're number one in their market, as well as their proprietary and knowledge in running these data centers, their network power around e-commerce, and the brand. I think businesses really respect Amazon because they've accomplished some things that are really incredible.